Guys, I want to give you a fair warning. By the end of this video, you're going to think I'm a terrible person for all the things I say about Robert Kiyosaki.
Yes.
I'm going to save it for the end of the video. Just watch the whole video, the build up. If you are sensitive, you need to turn the video off now because you will not like what I say. I say horrible things about this person. In fairness, I thought about it and I'm like, did he deserve that? Yes, he deserved it. Just please, if you're sensitive, don't watch any further because I don't know. And if you like what I'm saying, subscribe to us.
Paul, I really looked up to Robert Kiyosaki when I first got into just learning about investing. Rich Dad, Poor Dad changed a lot of our viewers' lives. And I know you've had some spicy things to say about him and you and Mo as well. Our viewers have asked you to look at some of his more poignant stances on assets, on Bitcoin, on the stock market. So I'd like to get into it and have you two react to some of these comments he's saying recently. So
if I borrow money, guess what? Do I pay taxes on debt?
I guess no.
Correct.
Like that. So when they lend out money, that's how money is created. Money is debt. Why is debt tax-free?
What?
I don't know.
Because that's how money is created.
Nope, that's stupid. That's wrong.
keep going.
And so the banks love it. They love
No, wrong.
lots of money.
Here's why.
So how
Am I waiting for this thing to end before I say? Oh my gosh.
and I buy assets with it? The poor person borrows money and buys liabilities like purses, cars.
No,
houses.
purses and cars and houses are still assets.
Still assets.
They're still assets. They're still he's 100% wrong.
Yeah.
Oh my gosh.
He's 100% wrong. Here is why you don't get taxed when you take on debt.
Tell me.
The reason being is, where was the sale? Where was the transaction that generated income? When you take it's very simple for you accounting people out there. Where's my freaking marker? There's a thing in accounting, when you increase cash, and when you increase liabilities, it's a debit to liabilities. Let's say $10. Cash is $10. Where's the income? It's a balancing. This is accounting. This is accounting 101. This is literally usually if you take cash in for $10 with a sale, there's income of $10. But instead, we took the cash in and now it's debt. Income's been removed. That is why liabilities are not taxed.
He's sort of saying it's an incentive. Liabilities are an incentive to push people to go buy something because
Well, of course that's the case, but it doesn't mean it's a liability. That doesn't mean that the asset. If I go buy a house,
your house is not a liability.
Yeah. By the way, this is just like when people say stupid, like, "Oh, if the bank owns your home." No, they don't. The bank does not own your home.
I think that's our next clip, Tim.
I don't get this. Like when people talk about this, I'm like, the bank owns your home. Why? Well, because they have the debt on it. Your equity is so low. But who owns the home then? Who owns the entire thing and then owns a part of it? When the value goes up, does the bank include in that?
Does the bank get included in the
No,
value?
then they don't own the fucking home.
Okay.
God.
Wait till you
people who listen to that go, no, that's not the. And you know what? Most people out there, they don't understand. So they go, well, Robert Kiyosaki. I remember
Paul,
20 years ago.
That's me because it makes a lot of sense to a dummy like me until you
It's
say
not about.
that.
It's just
it's
uninformed.
not being a dummy.
Yeah, it's just being uninformed.
And I just don't know. It sounds he's got the spicy music behind it. Oh my God, this guy's a king. Of course he knows what he's talking about.
But he also says some correct things, and that's how he'll get you in. And then you
Like
hear
what?
this, and you're like, well, the first part of it, you go, yeah, that's correct. And then he went on.
Oh yeah, you're right.
So
All right,
that's
let's
why
watch the next
it's like,
video.
Okay.
He says something right, and then he goes wrong, and you're like, oh, that's probably true also.
I'm not saying I'm right on everything, but I'm sitting there saying, like, at least when I make a statement, it's based on some sort of logic. Him saying that the reason we don't get taxed is because the government loves debt is like me saying 2 + 2 is orange. It's like, that doesn't make any sense whatsoever. The reason it's not, when you refinance your house, you get a big check. The reason you don't get taxed on that check is because there was never a transaction to be made that generated income. There was no income made. You took wealth from one hand and put it in the other hand. You took equity from your home and put it in your bank account. It was just a transfer of wealth. No transaction. There was no sale of any asset that occurred. Zero sale of an asset, which is also why, as an example, let me give this example out here. Let's say you buy a house for $100,000 and you put $80,000 in debt. Okay, so you put $20,000 equity in there. Fast forward 20 years, the house is worth $200,000, and somebody gives you a $200,000 mortgage on it. So you get all the equity out of your house. You get all this cash. Let's say it's paid off. You get all the cash. If you sell the house tomorrow for $200,000, you owe $200. You got $200 for it. You owe $200. How much do you get? At the end, how much do you get from the bank?
Of course, zero.
Zero. What's your tax liability?
Oh.
Your tax liability is 200 minus 100 because you bought it for 100, you sold it for 200. Even though you got no money at closing, you still have a gain on the asset.
Ready?
Number 2.
What happens with a house, I mean, a personal residence, something I live in, the money comes in and goes out, and this is middle class, but it also goes out through a mortgage payments. Oh, but I don't have a mortgage. You still have taxes. You have taxes and you have upkeep. So money's always flowing out. So that's why your house is not an asset, is because
He doesn't know the definition of what an
Wow.
asset is.
Sounds good to me. I mean, what he's saying sounds perfectly logical.
He doesn't
to me.
understand what an asset is. By the way, so what's he saying? You should rent? Guess what you're doing now? You're paying for the taxes, the mortgage, and all the upkeep for your landlord's property. Is that more of an asset? That's so stupid. An asset isn't about just because something costs you money doesn't mean it doesn't mean it's a liability.
He's looking at anything. Money out to purchase something is a liability.
Okay.
That's his definition of it.
Great, then live homeless.
Exactly.
I did
That's
watch
exactly
that.
what it
Yeah,
is.
I was like,
Don't
what
buy a
am I
car.
supposed to do? Not
Don't buy a
Don't
car. You
don't
can't
buy
go to
anything.
work. You can't go to work. There's still things you need to do in order to operate. And
buy-
guess what?
if you
the
buy
alternative
food-
not owning a home is renting a home. So now
buy-
you're paying the landlord's real estate taxes, insurance. Would you rent? Is that better?
Buying food is a liability.
Yeah, buying food is a liability.
Well,
Good call.
you talked about him not knowing about assets because he's a big fan of Bitcoin, and we're going to get into that right now. It's a specialist in
Here we
assets.
go.
So
That's the asset.
Video number 3.
Which is better, gold or Bitcoin? Who cares? The question is, how much do you have? That's all that counts right now. Because the reason you buy gold, silver, or Bitcoin is for the same reason. If you trust the U.S. government or the central banks, the Fed, and Wall Street, then save money. But if you don't, then buy gold, silver, and Bitcoin. And the thing I like.
All right, cool.
Silver and Bitcoin
Wait.
are exactly the same
So
thing.
let's
They're
go.
all the hedge.
You know what? He's right. He's
Let's
right.
pull it up,
So
baby.
let's go pull it up.
Yep.
Let's go check out how gold versus Bitcoin is done this year. Genius.
For those of
All
you that
right,
are
so-
wondering,
so here's
Bitcoin
gold.
is the hedge against inflation.
Here's gold. Here's gold. 1 year of gold. Ready? 1 year percentage. It is up 2% in the last 1 year. Okay, let's go to Bitcoin. You buy gold, silver, and Bitcoin. So let's go to Bitcoin. Let's go to 1 year for Bitcoin.
Definitely treating them as the same.
Yep, they're the
class.
exact
Yeah, they're
same
the
thing.
same thing. They're all hedges.
Down 44.7%.
Not bad.
That's all I have to say about that, about Bitcoin. He's just pumping. His income is made from selling things. That's why I always say to people, watch our channel. My income is made from 8 or 9 businesses upstairs, hundreds and hundreds of units, all these things. If you want to join on and you want to buy or something, I love it. But if you don't, I will still be fine. That's what I mean when I say you're going to get the real deal from me.
His income is from selling his liabilities.
Next video, he maybe has more clarity here. Video number
Probably not.
Video number 4.
Video number 4. God, he's so stupid.
talking about Bitcoin today. So I got into Bitcoin, went from 20, and then I'm basically watch a trading formula.
Let me guess, he bought at the bottom.
I think 7, and it moved back up. I said, okay, I'm back in. So I was back in at 9. So when somebody says, what do you think about Bitcoin? I said, I'm very happy.
So,
And they said, what if it comes back down? I said, then I'll buy more.
That's a good
yeah, but wait a
answer.
second. Wait a second. He just said it went from 20 down to 7 and went up to 9. He bought more of it. Then after when it went up, he rebounded. I think he just said that. Maybe I caught that wrong. So what he's saying is he has recency bias. If it goes well, he loves it. If it doesn't go well, what's he doing? If he's really going to buy more, mark my words.
He ain't buying more.
I guarantee he's not going to buy more.
No.
Why, mark my words. Mark this video at some point when Bitcoin's under 1,000 and say Bitcoin's dead. Bitcoin's stupid.
Well, he says he's buying more, and the host absolutely agrees it's a great, great option.
And that's exactly why it's not. Because if the masses love it, you should hate it. I've programmed myself to be that way. The masses say the sky's blue. I'm still not convinced the sky's blue. That's how programmed I am to not believe in the masses. And the best investors do that.
Final comment on video 4. I need these glasses.
Oh, those are good glasses.
Okay, we got his clarity on Bitcoin. Paul, now the stock market. I think
I can't wait to hear this
I
one.
was just going to say, you're
So
going to
pumped.
really love this one. Go ahead for video number 5.
So in 2000, it crashed. But did they fix the problem? No. In 2008, it crashed again. Did they fix the
What's
problem?
the problem?
No. Now, so what's going to happen? That's what's going to happen.
What does that even mean?
They print money. And the economy stays safe for a while, but then it goes down. Better?
Everything he said is correct. It's just a
I don't even know what this video means.
interesting way of.
Guys, bubbles happen.
Of course.
Bubbles occur. We've had like 30 bubbles in the last like 70 years or something, 80 years, something like that, like in some sort of asset.
And by the way, the bubble is not just from printing money. Like,
of course not. We had bubbles before they were yeah, exactly. Maybe before.
So everybody just keeps
and by the way, the
saying it's
2000 crash was a different crash than the 2008 crash.
Yep.
They were both bubbles, but for different reasons altogether.
Right. It's just part of the cycle.
Boy, Robert Kiyosaki is really f***ing stupid.
I think Tim and I were just shocked at how hard it was for him to blow up a balloon. Next video.
I'm trying to explain to you, when they tell you get out of debt, that's stupid because the money is debt. And the only way money gets out of debt is via taxes. So all the people who work for money, you read Rich Dad, Poor Dad, what's lesson number 1?
Rich people don't work for money.
Correct. Money is debt.
I don't know what he means by that.
I use debt as money.
Yeah.
What?
And everybody thinks getting in debt is bad.
No. Money is not debt. Money is an asset. Now, you might have a corresponding debt attached to it. If I borrow $1,000 from Seth, I have $1,000 of money. That's an asset. I have $1,000 debt.
Mm-hmm.
That's just like, this is literally accounting 101.
Let's keep going on the video. Just press play.
Well, who told you that? I think the stock market is for losers. Why would you put money in the stock market when it's manipulated?
Oh,
okay.
That's exactly why you should put money in the stock market. Because if you're smart, you look at the manipulation, if you really believe it's there, and you can profit when everybody else is being manipulated.
Right.
This makes no sense. By the way, you know what else? He's selling real estate seminars. I wonder why he's talking about the stock market being a fraud. Done. I'm okay with that. But just explain, like, I'm an investor. I invest in stocks, I invest in businesses, I invest in real estate, I invest in anything I think I make money in. I don't look at it as one is better. Whenever people say to me, Paul, what's better for the long run, stocks or real estate? I don't know. What do you mean you don't know? Well, are you getting stocks at a good deal and real estate overpriced, vice versa? What's the deal? I look at it as what's the best thing to invest is what's my best risk reward scenario at any given time. Sometimes it's real estate, sometimes it's stocks, sometimes it's my business, sometimes it's cash.
It's all part of the cycle.
It's all part of cycles. Mm-hmm. This is literally asinine. Like, I cannot believe this person still exists. He's going to get added to Mount Rushmore of people I want arrested for financial manslaughter.
Next video.
Or Tesla.
If you had the money to buy it.
What's that?
The companies. If you had the money to buy Apple or Tesla, what would you buy?
I just told you I don't invest in the stock market.
But in companies, in businesses.
I wouldn't invest in either of them.
Either of them.
No, because I don't get my money back. I want my money back.
Okay.
What does that
Gold
mean?
or Bitcoin?
I want my money.
He elaborates.
Gold.
Oh, he said gold.
Fight or flight?
That's a stupid question.
Sometimes people that fight lose.
So what? What's wrong with losing?
Okay.
I do agree with him. That was a stupid question.
And you ask me superficial questions rather than why wouldn't I invest in Apple or Tesla? See, that's a more important question.
That's an open question. You can do what.
No, fight or flight.
Why wouldn't I invest in them?
Because you don't get your money back.
Yes.
How does that even mean?
What does that mean?
What does that even mean?
What
First
does it
off,
mean?
he is right. That fight or flight was a stupid question. I think I heard that. I'm like, what the? I'm like, he's going to say fight like some, oh, you got to go out there and fight like some loser. What the hell does that even
I have
mean,
no
though?
clue. So this is the one that I watched last night. Tim sent me a preview, sent me a one-click preview, and I said, I don't know what this means.
I think he's saying
I
that
legit don't know what it means.
the manipulation he says that happens in stock market.
No, I don't think he's saying that. I think he's saying that it's like, I don't get any money
so
when I own these
if
companies.
you buy a company, and let's say the company doubles, just to use big number, I don't get my money back?
You got your money back and some.
And
now,
cash
the other
flow.
argument is, well, if the company's at $50 and they just keep getting cash flow and the stock is $50 later, the same thing, you don't get your money back. Well, along the same lines, though, hypothetically, the bank account keeps going bigger and bigger and bigger if you got no dividends. They pay down debt. The company itself is an asset. Oh, can we say that?
No, it's a liability.
Can we say that? So what is an asset then?
Assets don't exist.
But he'll sit there and say, I mean, what's the asset that he's talking about
His
then?
course.
So
His
he's
course
worried
is an
about getting
asset.
his money back, yet he's promoting Bitcoin,
Yeah. I don't
Although
get
when
it.
they asked him gold or Bitcoin, what did he say?
He did say gold.
which
He
I
did say
can't
gold.
grasp either. He's all over the place.
But I truly do want to know what he means by that and what is an asset to him. Because everything that he's mentioned is a liability.
Let's Google it right now. What does Robert Kiyosaki think an
Consider
asset?
an asset.
What is Robert Kiyosaki?
There's an answer to this. But businesses put cash
Anything
in your
that puts
pocket.
money in your pocket. Last time I checked, a house puts money in your pocket.
Last time I checked, a business puts money in your pocket.
Stocks do. All these things you just mentioned are liabilities. Anything that takes money out of your pocket. Oh my God, that's so. So what he's telling you is this: if you came to me right now and I said to you, you have to give me $2 in January, but in December I give you $10, and I'm the U.S. government, that is not an asset then.
If you want to see Paul reacting to more superstars out there, check out this playlist and you can see the fire even more.